okay in my life. So let me know if you can hear me right now. Okay, sorry it took so long for me to set things up, but here we are. My God, the market is so bad today. If you look at the China concept stocks, it is down 8%. This morning when I screen cap, it was around 10%. Pretty bad. I have never seen Chinese stocks dropping this much. Even the first time, last year, the first time when they said, we're gonna pass the law for and they list all the Chinese companies, it was never that brutal. This is something completely new. I understand. Yeah, my portfolio is bleeding like hell. So, all started with DiDi, obviously. Look at this, 16% now. Wow. And it's still dropping too. Look at the capital flow. No one is buying a dip. No one is catching the falling knife right now, which I think is smart to do. It is quite scary, yes. I haven't checked how much exactly is down yet, but it's not pleasant to see for sure. The Chinese stocks are driving down all the sectors, not only Chinese stocks today. So, but anyways, in my last night's video, I also said that the index can drive down more because it's overall and downtrend. I think for the first 2 weeks of December, the first half of December, it's gonna be more scary, more bloody, before we can have a Santa Claus rally, maybe near the end of December. That's my good guess. RK is 5% down, 93 now. It is breaking the new low. Sorry, my internet is a bit slow right now. That is why I haven't been doing much live recently, because my internet has problem. Yeah, you see? It's breaking the support, the yellow line. It can trigger more sell-off. Yes. Let's see what question you have right now. I sound out of breath. It's because I'm a bit stressed for the market and the first time I do a live for a long time, so not familiar with it. Any question for the stocks? For DiDi, I think right now people are a bit scared about what they're going to do, because they can choose to buy back all the shares and take the company private, or they can move the shares to Hong Kong. And of course, I think it's better if they can take the company private with a really fair price, which is the IPO price, with the exact amount of money they have raised. They can use the exact amount to buy it back. This is what I think is fair. But would they do it? I'm not so sure, because they plan to get relisted in March. So that is 3 months from here. Do they have time to do the whole process of taking it private and then making it public again in Hong Kong? This is really uncertain. So if it's too much in a rush, they might just, I think it's easier to move directly to Hong Kong. And I don't know how people would react to this, because not everyone can have a broker that can trade Hong Kong's shares. So if they don't, that means they need to sell out before, so it would create more selling pressure. And how they deal with this issue, it's going to affect all the other Chinese stocks right now listed in the US market. I think judging from the sell-off today, you can see how people are taking this news. But it's quite strange, because they announced the news at 8 last night, and in the Hong Kong market, it's not that bad. At first, there was some sell-off last night, dropping to 1% at some point, but recover mostly and close at 0%. So I thought the market had digested this news with the Eastern Time market, right? But it didn't. So it's quite strange. I think it doesn't add up for me, but it is what it is. The market is always right. There's no point to ask why. Any question for any other stocks? Yes, I do need to take a deep breath. Last night, yesterday, I went out and it's snowing in Canada already, so it's good to take a cold breath. Helps you cool down. But today I was too busy. I didn't even finish my morning coffee, and things happen. Let's look at NIO. Right now for NIO, there are two things you need to look at. One is DiDi and one is Tesla. Right now, Tesla is making lower lows of the day. Looking like there are some buying the dip, but every time it falls back down. If you open the 5 minutes chart, it is dropping with the 10 MA. So every time it touches the 10 MA, more sell off. So in comparison, I think NIO is already doing the least of the devil compared to Tesla. Because you look at this 5 minutes chart, Tesla is dropping, making lower lows. And NIO has not made lower lows yet. I think that might be the NIO day effect, because many investors like myself are looking forward to the NIO day. As I said before, I think they have not announced a lot of good news for the past few months. I think they're saving it up for NIO day. So we'll see if they have breaking good news to announce. What surprised me is Li Auto. I did not expect that to drop so many supports. 1, 2, 3, 4, 5. 5 MA, one day. Wow. Especially with the delivery numbers they have been reporting. Triple than last year and last night in the Hong Kong market. How do I find it? Wait. Okay. Yesterday in the Hong Kong market, it digested it pretty well. Touched the 10 MA, bounced back up. So look at the green bar. A lot of buying in volume, right? But that's not enough to digest the DiDi news, I guess. On Monday morning, you will see a sell-off. So for Baba, I said yesterday the last support I would give is 111. 111. Oh, this is the Hong Kong one. The US one. Yes, 111. Today, the bad news pushed it down to 108 to be the lowest. But we also see quite a strong rebound. After that, we are now at 112, so slightly above the support still. Capital flow, you can see it was at this point around 10:15. The capital started to flow in quite fast, and the money inflow is still more than the money outflow, especially the big buying order. So you can see that BABA is looking better than most of the others. Surprisingly, right? Let's compare it to Tencent. Tencent has the opposite. the extra large order is quite down, but the small order is up. So in comparison, just for the capital flow, I think BABA right now is looking stronger than Tencent. But the best one is JD.com and PDD. You can see all the green bars. I think part of the reason is because the e-commerce sector has been selling off quite a lot. So maybe the market thinks it has done enough correction already, and the intrinsic value should be supporting it there. Okay, for BABA, the PE ratio is 16, and JD 30. Let's look at Pinduoduo. I think Pinduoduo, well, the next support I gave was 56, and it broke the support right away this morning. So now it should act as a resistance. But regardlessly, it hit the low of the day, also around 10, and did a strong bounce back up. Right now, I think it just needs to push the strong resistance of 55 to 56. So if we can push it through or close above, I think PDD might have a good rebound. Futu, FUTU. Last time I said 50 should be a support. So you saw that the moment it hit 50, you saw a strong run up all the way towards to 64. So 30% up, almost, right? And I said if 50 broke, it would reach around 40. And now the new support should be 36. So if we can close above 36, there could be a chance. Look at the capital flow. You see? Wow. V-shaped recover. So not that bad. Okay? It's not that bad. I think this morning, around 10, should be the most panic moment. And if the stock did not get back up after that, it's probably because of the sector. Like for NIO, it's the EV sector, because Tesla continue making lower lows. But for the Futu and e-commerce, you can see that they all bottom out around 10. So there's hope. There is a little bit hope there. No, not panic yet if you did not cut at market open. So what else? Tiger and Zep. Okay, Futu should be similar with Tiger as well. So you see, same thing. At 10, actually, Tiger had a much stronger run up than Futu. Yeah, right now it's let's see, it was at most 11 or actually 12% down, and now it's at 3% down. Strong rebound. It's close. It's green right now, showing. So we might have a green bar today, but what's not good is the volume is not as strong as the other ones. Let's look at Russell 2000. It did not reach the 210 that I was hoping for. So now it's kind of in the middle, hanging, you know. It's not at the support yet. And it's below the 5 MA. So it's kind of an awkward situation, you know. I would say it's a 50-50. So if it's at 210, I would say great risk-reward ratio. It's good. There's good stop loss level to be below 208. So it's worth a shot. And if it's above 218, then I would think maybe it got supported and bounced back off. But right now it's really in the middle. So I guess you have to judge. I mean, you have to take it as a 50-50 if you want to bet on it now. And look at the sectors. Look at the sectors your stocks are in right now. ZEP. Right now it's down 7%. Let's see. It also bottomed at 10 and had a good bounce back up. The buying volume right now is slightly more than the selling volume. But the strongest resistance should be at around 6.5. So you can't say it's a reversal unless it has passed the strongest resistance right now. Okay? Should you sell all Chinese stocks and buy DKNG, Discovery, UWMC, and LGVN? I'm not sure how to answer that. YSG. Interesting. YSG actually had bottom earlier than everyone else at 9:45. Capital flow not looking good though. 1 hour chart. I guess what's good about it is that even though all the most of the Chinese stocks had big selling volume today, recently YSG has been dropping quite deep, but the volume has been shrinking. So at least that. When this happens, it usually means a lot of people are cutting loss, but no one has entered to buy the dip. So my thinking would be that retail investors are losing hope slowly, bit by bit, so they are cutting losses. But institutions don't want to catch the falling knives yet because they think they want to wait for everyone to finish selling first, which makes sense. Who would be dumb enough to buy it up so then the people can cut loss at a higher price, right? So that makes sense. But when this happens, it means when the institutions start to go in, it can bounce back up pretty strong, pretty fast. I mean, you can take a look at Xiaopeng. You see, in May, it kept dropping quite deep, quite fast. Every day, no rebound, right? Just following the 5 MA to drop. But the volume was shrinking at that time. So that means not a lot of institutions were selling, but more like the retail investors were losing hope, desperate sell. So in this scenario, when the institutions do buy in the dip of very fast, so you can see a deep V like this, because it was little effort to pull it up when the selling was really mainly because no one was catching the dip. AH. I think it's not good that that it dropped the lowest point of yesterday, which is 16. Capital flow, no sound. 5 minutes chart. Oh, internet's so slow. Yeah, you see? Flat. No one is buying the dip. So I guess not much hope for EH right now, unless we get the certificate tomorrow. But I think it's gonna be next year. So if you can wait a few months, you can hold it. If you have not entered, I think you can wait a little. If your stop loss has triggered at 16, you can maybe wait a little until it has maybe closed above 16, maybe for more than one day. Okay, CO. 76, the lowest. I would say it's same thing as what I said yesterday. It broke the support and is not yet at the next support. So it's kind of in the middle, hanging. So I don't really suggest what to do right now. If your stop loss trigger at then I would say wait before you re-enter again. At least wait until it had hit the next support, 69. When do I see hope for Chinese stocks? How to answer this? I think it really depends on the sector right now. It totally depends on the sector and the business. For the HSI, I think on Monday it might be a brutal sell-off. The future is already responding to it. Let's see, for HSI, if it breaks for real this previous, which is 23600, it can have more sell-off to where? Let's zoom out. See, still here, the yellow trend line. Right now it should be sitting at 23189. So 23,100, around that, to be the trend line. So let's see if it can get there or slightly below, like the target I gave before. What was it? In September. It was 22800. 22,800, right? So if it gets to this point, I think it might be the bottom. I can't say that anymore because you know, what's the term? I know in Chinese, 打脸了. My face keep getting slapped. I think right now the Chinese economy it's experiencing a big turnover from the old economy to the new economy. So there's a reason why HSI has been hit so bad, even though the Shanghai Composite has recovered so well, right? How do I get to the Shanghai Composite? Yes. You see the Shanghai Composite, it's going up and up. I think it will continue going up too. Maybe some pullback, but there's a good chance we can see the previous high, 3,700. So why is the Shanghai Composite up and the HSI is down? I think it has a lot to do with the stocks that Shanghai Composite in the sectors and the stocks that the Hang Seng Index hold. It has a lot of the old economy. Like, I always believe that right now it's a big transition from the old economy to the new economy. And what I realized recently is that, my God, even the BAT, the tech giant, if they're not careful, they might be considered the old economy as well. When I realized this, I took it was a shock for me too. Because the internet era, I mean, the internet era is in the past. Because e-commerce was booming for the last decade, but now it needs more than that. It needs more than just moving offline sale to online sale. I think the Chinese consumers have been more educated in the past 10 years. So we are moving into the new era, a new era of retail, a new era of technology. So the HSI still holds a lot of the components, like the mainland real estate sector. And the real estate sector is not going to be the engine to drive the Chinese economy for the next decade. I explained that in the 2 videos before. I think the engine to drive the new Chinese economy is going to be EV, new energy, and so on. So if these giants from before, if they cannot make a successful transition, they will go down. So this is a critical turning point for these giants, okay? So if they can take advantage of their cash position, the dominating position of them in the Chinese market right now, they can do a good, successful transition. I believe it, but it needs a good leadership. And right now, when you are investing in the Chinese stocks, I think the number one thing to look at is the sector. Is your sector considered old new economy? Leadership would change everything right now. Because we are at the transition period. If, when Apple was falling, because the PC era was slowing down, it was booming in the 80s when everybody wants a computer in their family. But after they have it, what's next, right? Like right now, the e-commerce is saturated. The social media is saturated. What's next? Okay, what's next is the real question. It's a real challenge for the leadership. And then Steve Jobs came back to Apple and it changed everything. He turned around the giant boat and made the next driving engine for Apple for the next 10 years. Okay? For the tech giants right now. And I don't mean only the Chinese tech giants. And I also mean the US tech giants. If the leadership is not good, it will be the same result as what you are seeing with Baba right now. I'm not even joking. Look at the US stocks right now. If they don't have a good leadership, this is their future. Okay? So it all depends on the sector and leadership. So hello. Hello, can you hear me? Oh, finally. Yes, where was I? So, yes, you need to look at the leaders. If you trust they have the leadership to turn it over. And right now, I think that JD and PDD have a very strong leadership. Although both of the leaders have recently retired from the board, and I really don't know why. So that is the risk you have to take, or search on other stocks that you believe in the leaders. Okay, sectors and leaders. It's what you need to think right now. Let's see. So, Baba is dropping a little bit more. If it breaks the 108, that is worrisome. All the, all the stop loss that trigger, just wait on the side for now. If you have the stop loss trigger, it's better to wait. William Li. I think he's a good leader. I think he's the kind of leader that would attract talent to follow him, to follow his vision. So if he has, it kind of motivates the team, because he's not an engineer, and but I think this kind of leaders can encourage their team very well, and especially when he has a crazy vision, right? I think it took a lot of courage for him to make a different standard to have the battery swap while nobody was doing it. Even Tesla said it's not good, right? And no EV brands at that time were making battery swap. So I think he had a crazy vision at that time and a lot of courage to make that happen, and he stick with it. So just for this, I have to give him a applause. So I think he has a vision and strong belief. And remember last year, no, a few months ago, a friend of us were working in Chile said that a lot of the teams were leaving for NIO because they like the corporate culture there. So it's good to find out the leadership, because the leadership decides the corporate culture, and the corporate culture decides the talents, the kind of talents they can have, and the kind of talents they can have would decide the future of the company, whether they can compete in this competitive field, right? I want to talk about Xiaomi a little bit. It's falling quite hard. No hope. Still on a downtrend. I mean, it can drop more. It can drop to 15. It can drop to 15. But don't forget that it was up from 8 last year. No, 2019. And last year it was 10, 9. Right? So, yes, last year it's 9. So even though you feel like it's dropped a lot, it's not that low. It can still drop more. It can drop to 15. But it doesn't mean it's a garbage company. I still think Xiaomi is a very, very good company. And I think the CEO, Lei Jun, I think he's very, very good entrepreneur, very responsible, has good vision, very bold. I mean, he was the first group in China at the beginning of the tech boom to make a fortune, right? Back in the 90s, the 2000s, he already made a fortune. He could totally retire and just make a bunch of money with the investment. But instead, he created business again and again, new business. He created Xiaomi. He got the second time of success. Maybe even bigger than the first time, right? And now he's creating the car business, which is an even plan, which is even more ambition than Xiaomi, because making a car takes a lot of money, right? So I think it takes a lot of courage for him to do that. He said it is the last time. It's the last time he's going to devote so much of his time and energy. It is the last business he's going to do, and he's gonna put in everything for that. So I think just for that, respect. He could totally retire with a good name, but no, he's doing it again. So I have a lot of respect for Lei Jun. Top of that, he's buying back his own shares. I think he just tells you he thinks how much undervalued is Xiaomi right now. Li Auto was crashing hard while I was talking. What can we do, right? Other than just watching it. Business-wise, it's going very, very well in China. There's no doubt about that. Right now, Li Auto, NIO, and Xiaopeng, they have 3 very different positioning. So if you worry they're competing with each other, not really. They're not really competing with each other. Xiaopeng right now, it's getting quite popular among the young people. Among the youth, Xiaopeng is considered a cool and young brand. Fashion, trendy, even the name. People are slowly forgetting about the name, because a year ago everyone would complain about their name. But right now, because people like more about the product, then the name the name effect is easing off. So the brand is definitely improving. In terms of leadership, I believe in He Xiaopeng more than a year ago, because a year ago, especially with the Twitter fight between Elon Musk and He Xiaopeng, I was a little bit disappointed. I did not like the fight back like that. It felt a little cocky for me, but when I was watching his interview, he admitted that he had learned from the mistake of the many mistakes he made before in the past 2 years. He was overexcited. He didn't think too much from the consumer side, and I agree very much. From the failure of the G3, I think he had learned the big lesson. And I like all leaders that have learned big lesson. That was why I bought into Luckin last year, because I like beating down smart people, smart leaders. I like it when they're beaten down, because they learn a valuable lesson, or sometimes we call it the life lesson in the case of Luckin, right? So I like the fact that they're talented, they're smart, and they've learned a lesson, right? So my view on Xiaopeng had improved a lot from last year. And the P7, the P5, is doing great in China. I think that the valuable lesson had really resulted in the improvement of the P7 and P5, to think much more from the consumer side. And the fact that they're working harder and putting more effort in the autonomous drive, I think that is why RK had started the position of Xiaopeng yesterday. We'll see what ARK is doing today. I bet they might buy more of the dip of Xiaopeng today, but who knows? with the delisting threat right now, the fears that's going on. But Li Auto is focusing more on the family aspect. So I think it's a very big demand for family needs in China. So and the fact that they are selling so well with just one model, I believe they would do well with many more models they're launching in the future. And I also heard that the corporate culture is very good internally for Li Auto. So I like that too. With good corporate culture, they can attract more talent, especially the old car companies like JC, Changcheng, you know, etc. These kind of talents, they like to go to younger companies with good corporate culture, right? So right now in the EV field, it's very competitive. It's only a fight with talent and capital. Whoever has the best talent and capital would win, right? So I think so. XPeng and Li Auto, in the long term, they should be looking promising. And NIO, I think what people worry the most is the fact that they're not listed in Hong Kong yet. I think the second listing in Hong Kong or China mainland China should be on the way. I think the case is more complicated than XPeng and Li Auto, because they're listed in US for longer. They've got more international investors. They were invested by the government. So I think all of this would make it more complicated. So that's why it's taking longer. But I think NIO has their own position targeting the higher end. Kind of like taking shares from the BMW, Audi, and Mercedes, right? And the battery swap and the BAAS is different than everyone else. So they're going on their own route. So they should have their own position, their own market share in China. The EV is driving down more, maybe because of Tesla. For Tesla, 1060 should have been a good support. So the moment it broke this morning, it would trigger more sell-off. For now, the next support is not far though. It's 980 or maybe 1000, because at round number it's psychologically a support. But I will think also it's 980 and 900, because it's the previous low. I mean the previous high. So should be a support. I remember a few weeks ago I said Tesla should move in a triangle. So I guess the triangle is not broken yet. It's still at the right now it's at the support. So let's see if it can give a little hope to the EV sector, right? Let's see more question. Oh, sorry. EV war is next. Yes. Is the audio okay now? Thank you. Thank you for giving me the heart. Right now, the divergence between the Chinese stocks and the Chinese market versus the Chinese stocks in the Hong Kong market versus the Chinese stock in the US market is getting bigger and bigger. Might be continuing this way. So this is the Chinese stocks in the Chinese market. This is the Chinese stocks in the Hong Kong market. This is the Chinese stock in the US market. And honestly, I don't know if this can reverse, because I'm afraid people would always think it's safer to invest in their hometown market. So keep that in mind. For the EV sector, in China, you don't only look at Tesla. You also need to look at the CATL and BYD. Right now, CATL is still going really strong, in a way that every pullback, it's a buying opportunity. And it's almost impossible to wait for a pullback. So I think the EV sector, it's going to continue going up, and not just for this year, not just for next year, for the next 5 to 10 years. This is a sure win. It's a no-brainer for the EV sector right now. This I'm almost 100% sure, because if the real estate sector is not going anywhere, it's going to be flat at best scenario for the next 10 to 20 years. Then the next driving engine is going to be the new energy field. I think it's going to be the new energy. This is going to be the war for energy in the whole world. I think it's not just China, in the whole world, because this is the only vision that the whole world and all the countries can agree on. It's more like the only one thing they can agree on. All the crap about, capitalism, communism, all the fights between East and West, those are insignificant when it comes to the global environment. So this is the only one thing that can put everybody on a common ground and everyone can agree on. So if the world needs to have a reset of order, it will be around the new energy. I think it's the new energy. So if you want to be fearful when everyone is greedy, I would say go greedy on the green energy. It's risky because it's still very new. You don't know how strong the new companies versus the old companies to do the transition, right? The old companies can do the internal revolution, right? But we don't know which company would win in the future. So the best is to throw all your eggs in many baskets, right? You invest in Tesla, you invest in Lucid, you invest in Rivian, you also invest in NIO, you invest in Xiaopeng, you invest in Li Auto, you invest in CATL, you invest in Geely, and Ford, and GM. Put your eggs in all the basket, because I think more than a third of them would be the winners in the end. At least a third, right? So, and if they are the winner, they're gonna be 5x, 10x in 5 to 10 years. So it's going to make up your losses compared to the other ones. So I think if you want to be fearful when everyone is greedy, bet on something that is gonna be huge for sure in the next 5 to 10 years. Sometimes, yes, they might have a pullback, like the chip shortage, driving everything down. The silicons, the material rise, drive down all the solar sector. But this is only temporary. This is only temporary. It won't last more than 1 year. It won't last more than 2 years maximum, okay? But in 5 to 10 years, you're looking at 5 to 10x in this field. And this is a sure win, a no-brainer, right? If anyone is abandoning the old sectors, this is where they're going to put their money in. This is where the institutions would put their money in. So I don't see why we need to change our mind or conviction on this just because of a correction. Sometimes a correction can be long. Sometimes it can be volatile. I guess what you can do best is that you can have one part of the share that is long-term and you don't touch, and the other part of the shares you can trade within the range, sell at the resistance, and buy at support. So you can keep trying to lower your costs in this way. In the meantime, not losing or risking losing your shares. Okay? So the audio is good now, right? Yes. So I guess right now, AV is a no-brainer, and for rebound opportunity, I guess you can look at the extremely oversold stocks that had started the correction earlier than everything else. And today, with an environment like this, is still not dropping as hard as the others. This kind of stock, maybe you can give it a try for a quick rebound. So is that everything? I know it's very brutal today, but I guess there is nothing else you can do other than just do more DiDi on the stocks you're holding. Okay? To see which one has more opportunity, and allocate your money according to what you think has more chance, and put the eggs in many baskets and put it in a good sector that you can believe in for the long term, so you can sleep better at night. Oh wait, so it's about the crypto sector. Now for the crypto, it's a little bit special because they cannot get relisted in Hong Kong. China doesn't accept cryptocurrency, so they don't let any of these stocks to get second listed in Hong Kong. This is what you need to pay attention to now, right? CAN and EBON, CAN and EBON, they have tried to get their primary listing 2 years ago in Hong Kong, and it got rejected because they said they don't accept crypto related to the US market. So if you want to buy CAN, or if you're holding CAN or EBON, this is something you need to pay attention to. But regardlessly, I think CAN is it's too crazy for the fall today. It dropped at most 30%. So I think if you have a small pocket chain, you can give it a try, because they were at loss a year ago. A few months ago, I checked, they started to make money, right? And the PE ratio was still like 70, 70 to 100. And a few months later, the PE ratio is 10. It's 10. So they are making profit fast. On top of that, they have raised fund a few months ago. They were smart enough to raise fund a few months ago. So they had raised, I think something like 30 million or something. I have to check. So they have good cash amount right now. They have good PE ratio, super low valuation, and they are making money, growing business fast. So this kind of company, even though their share price drop, the company is not afraid at all. You know, at most, they don't even care what share price they're trading at because they are sufficient. They have cash, they are making money. So they cannot care less about their share price. So if you have pocket change, you can give it a try. Okay? Sorry that my voice, my recording, the audio level it's choppy, right? I think it's because of my internet. Yeah, next time if I need to do this, I need to get better internet, move to a better spot, I think. So right now for Chinese stocks, look at DiDi. For EV sector, look at Tesla and DiDi. And for the other ones that you see, DiDi is bouncing a little. We'll see. We'll see. PDD, see if it can close above 55 or 56. Might still have hope, okay? Now, that should be enough call for the day. I said if Baba dropped below 111, I would do the live to answer all your questions. And I don't know if it would continue dropping 111. I don't know if it would close below it. But I did the live anyways because of the situation today. And I hope I have helped you a little bit. Oh, right, Luckin Coffee. Luckin Coffee. I said I took out my original position, which is 25% of the shares when it was 16, 15. And the day it got to 17, almost 17, I suggested to take some profit. I didn't know it would keep dropping so deep. I guess it's really the news today, not just DiDi, but also the notice from Goldman Sachs, GS Wealth, says that there's one institution that's holding more than 60% of the share, and this is not good for shareholders, and we should counter that. So right now, I need to look more into it. But I'm not surprised though, because this whole run up, it seems like there is institutions accumulating the shares, you know, fearlessly. So yeah, that is possible. Someone wants to take it full control, because the sales of business, I mean, the sales of Luckin is going very well. So I'm not surprised if someone wants to take it private. So it's possible. Right now, Luckin has broken the supports, many supports, the 120 MA, and also the gap up before, which is 12.8. It broke the gap up. Weekly chart, it also seemed to be breaking the 30 MA, 12.7. So it was the same support as before. I mean, as the gap up. So I would say, yeah, so might go back to the 10 range, 10 to 11. Okay, watch out for that. Now that's it for today. And if you have enjoyed this video, please give me a big like in anyways, and write me comments. Let me know what you think, what you did, how is your day, okay? And I will see you in my next video. Bye bye.